following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen,
keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there, safe day. So make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Market-wise, let's take a look at it out here. We have the Dow Industrials down 376, Nasdaq's off 131, S&Ps are down 48, gold contract up $17.10, trading at $11.09 an ounce. Silver caught a bid. Gold has been catching a bid. Silver caught it, folks. Up 35 cents, $14.32. Both gold and silver want higher price. Platinum is flat at $8.78 an ounce. Copper down 6.5 pennies at $2.02 a pound. Light sweet crude down 66 cents, trading at $33.32 a barrel. The oil market yesterday broke a B point of an ABC structure on the way down. Wants to trade under 30 bucks. Pretty wild. Bonds. 10-year up 8 ticks, 127.03. 30-year up 13 ticks, 156. Bottom line, bonds look to me that they absolutely have topped out. And it's going to be pretty wild. And the reason I'm saying that is that when the futures, we're down 47 right now, even when they're down 47 pre-market, money's not going into bonds, folks. It's pretty amazing, actually, watching this thing shake out. King dollar down 936 ticks, trading out at 98.33. The euro is up 14 at 109, and the yen is trading at 117.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? And the world of the S&Ps, let's take a look at them. What do you have? You get volatility in spades. We've had two really sweet moves today. Well, three, actually. Opened lower, had a huge bounce, had another downdraft, and what I expect we're going to see here is another bounce coming into the close. It's going to be wild watching this whole thing shake out. So, if we take a look at the SPY first, let's put the SPY up. So the SPY right now, folks, is trading at 194.46. The benchmark that it was going after, which it got today, was the October 2nd high or the low. I expect at this point, first time down, you're going to reject the high. Now, the high of that benchmark is 195.03. We're at 194.51 right now. We've done 153 million shares. That benchmark has 211 million shares. So we know we're not going to get the volume. The real question is going to be coming into the close, do you get a rejection of the high of that price? If you get a rejection of that high, bottom line, what that would be basically setting up is you probably get a B to C of an ABC structure on the way down. That's how I'm looking at this. Inside the NDX 100, what do we have? The 3 Qs. Inside the 3 Qs, same type of setup. 3 Qs are down to 47 million, which is some juice, by the way. The difference in the 3 Qs, there's a differential inside the 3 Qs and the SPY. The Qs have 47 million. You're going into the October 8th level, which has 50, and we're going to do more than 50 today. The benchmark is the same day, which is October 2nd. That's 104.01. Now, we've hit 104.81. So 104.01 is still game inside the NDX 100, which is the high of October 2nd. Gold contract. What do we have with gold? Gold has caught a bid the last 3 days. Gold wants higher price. Gold market up here. We've done 199,000 contracts today, big numbers. We're at 1109.50. Gold wants to make this run up to the swing high of 1192. Your first level, I figure we're going to build a bit of cause will be probably 1137. Now, the cool thing is that silver hadn't caught a bid as gold had. That changed intraday out here today. What we had out here intraday is that if we take a look at it, silver right now is trading at 1434. Come on, baby, this shit. And what we had is that, the silver basically stayed flat up till about 10 o'clock. It wasn't bad. It stayed flat. Then at about 10:40, it started moving, had a nice expansion at noontime. Bottom line, it finally has some juice in the market, and silver is psycho. There's no doubt about it, man. But bottom line is it got what it needed. You're up 35 cents, and you got 64,000 contracts. So they started covering silver if they were short. They started buying silver as they wanted to go long. Bond market. Now, this one's going to get really intriguing. So watch when we check this bond market out. The 10-year bond has done 1.3 million contracts, which is good volume. You are at 127.02. Well, we hit 127.10. You're going into the swing point, which is 127.10. We hit 127.21, rather. That swing point that we're going into has 1.2 million contracts. So we could get a test of that tomorrow. The way this has been trading, however, intraday and daily, is saying that it wants lower price. And the reason I'm saying that is this. When we hit the highs were hit at 0400 hours this morning. That's Eastern time. That is when, China had already imploded. China was open 29 minutes last night, and out of those 29 minutes was probably really open up. 15 minutes was down 5%. They closed the market. The market went from 5% down to 7% down in 1 minute. They closed the market. Now, they took those controls off after the market closed, and so tonight, it's going to be trading freely, as free as they'll let it trade in China. The 5% rule that large funds cannot sell is still in place. That you own more than 5% of the stock, you can't sell, period. 30-year bond. What do we have with the 30-year? So my point is it's going to be pretty wild watching that market trade tonight. And what very well could happen, which would be really weird, is that you don't get selling because folks know they can sell now. We'll see where that shakes out. But we'll look at the Shanghai. The Shanghai, no doubt, down 14% in a couple days. 30-year bond. What do you have with the 30-year? 285,000 contracts. You're trading at 156. We've hit 156.25, and that didn't get to the swing, which is 157.17. It looks to me that the bond market has actually topped out, which is going to be really wild, because I'm talking about a top out from a bull from 1981. You stay right there, folks. We'll come right back. Dow Industrials right now are down 377. Nasdaq's off 129. S&Ps are down 48. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials down 384, Nasdaq's up 130, S&P's are down 48. And I'm going to bring you over and I want to show you something here. So what happens, folks, at short-term and longer-term bottoms, you get fear that's in the market, and for some reason, people sell at the exact same time. Now, we got the first downtick in this market. It was a good one. That downtick was established out here at 1:30 Eastern Standard Time. You get a minus 1448. Now, what that generates, okay, is a bounce as we come into the close once again. That doesn't generate, a monster bounce, because what happens on a monster bounce is that what you need is that you need a couple down ticks, you need a trend going through the roof, meaning very high, and then you need a rejection of price. Well, the trend's not going to be through the roof, because the trend right now is running at 1.17, which means it's almost an even market between buyers and our sellers. So bottom line is that, we'll see how this shakes out, but it looks that what I do expect you're going to see here is that you're going to come into a Friday, and more than likely, whether it's the jobs numbers, we'll see whether we get that B to C of a structure on the way down, of an ABC structure on the way down. Now let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. He's got a great show every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Also has a great newsletter, the Technomental Commodity Report. You can get that by coming over to our website at TFNN. You go to newsletters, go to trading newsletters, and right there you're going to see the Technomental Commodity Report. You can test drive it 30 days absolutely free. Andy Hecht, what's going on?
Tom, I'm with you on the phone today, having a little technical difficulty, but we'll clean it up before my show.
That's the beautiful thing. I heard we get a couple great guests coming on too, right?
We do. In your second hour, we have Sean Wright, who's a fund manager for Cardin Capital. And he collaborated with me on the article I wrote last weekend in Seeking Alpha, the 10 reasons that the stock market was going lower in 2016. And then during my show for the full hour, I'm going to have his partner and guy I teach with at University of Colorado Denver Business School, Gavin Dumke, who's a co-portfolio manager at Cardin Capital, and they're going to talk about their view of the stock market. So it should be really interesting.
That's awesome, man. That's absolutely awesome.
Should be really, and it's a good time to have him on because
That's
it's
for sure.
ugly out there, huh, Tom?
It's ugly. It's ugly.
It's ugly. I mean, it is ugly. And let's talk about gold a minute because gold's interesting.
Oh yeah, that's a beautiful
Gold's
thing.
interesting. You know what? I wrote a bit about it. The January effect. Last January, gold got up to over $1,300 an ounce. It made highs for the year.
Okay.
And, it kind of had a really ugly close to 2015. I mean, we just made lower lows and lower highs all year long in 2015. But kind of came out of the gate this year the same way it came out of the gate last year. And I'm a little bit bullish on gold here. Now, I don't think it's going to get up, to crazy levels, but I do see buying in gold, and, it makes sense. There's a lot of uncertainty in the world.
Listen, you know what my take has been. The way that I'm looking at it, it broke this consolidation, which is positive, no doubt. Today is a monster move, man. I mean, it's actually, this is a nice follow-through move. There's no doubt.
It's a nice follow-through. Last year, the bull market in gold ran from January 1st through January 20th. And that was kind of it. We've got up to over 1,300, and it really didn't go much. It never traded above there again over the course of the year. So let's see what happens. I mean, there's a lot of things going on this time of the year. You have the Chinese New Year coming up. But quite frankly, I think the Chinese are paying attention to a lot more than their holiday.
Well, they're going to be this year. There's no doubt.
Oh, yeah. It's and what happened in the stock market on Sunday night, again last night, unbelievable. And last night, Tom, oil traded down to $32.10 a barrel. That's the lowest level since February 2003, and the lowest level in Brent at $32.18 in over 20 years.
Yeah, no, listen, man, it broke that B point with volume, man. Big volume, too.
Absolutely. So tell me, what do you think of this? The oil price, we're trading at the 2003 levels. The XLE in 2003 was under $25 a share.
Well, the ABC structure down, the price projection, a 1-to-1 is approximately $28.25 or something,
Right. But what I'm talking about is the divergence that I'm seeing with the XLE. The XLE is currently, about $57 a share?
Well, the XLE is at 56.68, but that's breaking out its lows today.
Right, I know. But if we look back to the last time oil traded at this price, the XLE was less than half the value it is today. So I'm a little bit concerned that, we haven't seen the worst from the oil sector stocks. And that could be, China's the first leg down in the stock market. And if oil doesn't, if you're right and oil goes down to $28, the next leg down could be oil related.
No, I can see that. And what's also out here is that, now I'm switching gears on you a bit, but like if you go look at Goldman Sachs, folks, right? Goldman Sachs has just broken out all its lows. So that's like saying, okay, man, the August 24th low on Goldman Sachs was 172. This thing in 2 days has given up $10. We're at 164. That's down in 6 months from 214. It's down from the counter trend bounce on November 9th of 199. Now, that is a heads up in the aspect of what's going on in the banking structure. So there's trouble in paradise here, man. Do you know what I mean?
There's trouble in paradise. And even Mr. Soros came out last night. And
he's running his book. I mean,
yeah, of course he is. But he's made some big calls, and he's been right. So. Oh,
I know. I'm not saying he's not right. I'm just saying that he's definitely shot the market, man. That's
no question.
You don't come out and say that the markets are going to crash and you go down to 2008, in a huge fund like that without being shot. So.
Right. Of course. So other markets that are interesting today, and in the beginning of this year, copper went down and traded below $2 today.
Yeah, it hit that. Let's go look at copper for a second.
It hit the 199.
Yeah, and let's see. That's interesting. Now, okay, I'll look at it, and it didn't get back in the range. So the range on this contract, folks, is $2 and. Oh, no, it did. Okay, so it went 199, came back inside. Yeah, we're at 202 right now.
Yeah, but copper's all about China, and this Chinese thing is not over, so it's going to be. It could be a little bit ugly.
Well, the thing that's amazing about the China deal also, folks, is that it's one thing if I'll bring up the Shanghai for you. So when you bring up the Shanghai, there we go. Okay, so you had 7% last night. The prior night, you went sideways. So if we just look at the beginning of the week you're at 3,538. You're at 3,125. Now, what has also happened is that the yuan, which is their currency, went down. So they're losing both ways. They're losing on the market, and the valuation of their yuan is going down. You stay
That's
right there,
right.
Andy.
And copper. Well, we could continue if you want.
We will.
Sure.
Oh, hold it. Do I have Sean on next? I think it.
No, 420.
Stay right there. Awesome. Stay right there.
Sure.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are down 440. Nasdaq's off 145. S&Ps are down 54. And this market can't, well, the S&P's having a hard time holding their lows. The Nasdaq is holding the lows. It's whacked it a few times here, so I suspect the Nasdaq is going to try to kick out of here. But this next half hour in trading is going to be really wild, watching how this thing shakes out. We're talking with our man, Mr. Andy Hecht. And, of course, don't forget, every Tuesday, Thursday. Well, actually, folks, let's talk about this for a second. In 2016, which we just kicked off, we have a new schedule. Monday, Wednesday, Friday, our man, Mr. John Logan, kicks us off. 8 o'clock in the morning, go at 8 to 5. Swim lessons, TD Ameritrade Thinkorswim, go every day, 5 days a week at noontime. Monday and Friday, Daryl Mott, my son Tom, and myself, we do the Bull Bear Binary Option Hour, 10 o'clock in the morning. And then Tuesday, Wednesday, and Thursday, we do Money Masters. Tuesday, Thursday, we start at 7 o'clock in the morning. We have Nico and Paige keeping it healthy, 7 to 8. We go all day, and then our man, Mr. Andy Heck, 5 to 6 Eastern Standard Time, does a technical commodity report. I'm going to have one of the guests on coming the next hour. Andy's going to have Gavin on the full hour. So we get some great programming for you. If you do enjoy the program, folks, please tell 3 people. We really appreciate it. So, what else are we looking at out here?
I'll tell you, the best performing commodity of 2015 was cocoa, and so far in 2016, it's the worst. Cocoa's down over 15% from the highs, and it is tanked the first week of the year. I mean, we traded down to $2,900 today, below $2,900 a ton. We were almost at $3,500 a ton a few weeks ago.
Yeah, $34.29 to
$34.29 the highs
to $28.98.
And now we're below 3,000. I mean, that's an enormous move, Tom.
Yeah, that's sick. Holy cow. That's pretty,
I know. So, volatility, man. Volatility is the hallmark of 2016. And we're coming out of the gate with some really crazy markets. I mean, look, you got natural gas up 10 cents today. The thing is, it's $2.37. It was $1.68 a couple of weeks ago.
Right.
You got oil trading down to $32.10 today. You got copper breaking $2. You got gold going on the upside. You got divergence and you got the dollar moving down today, and a lot of commodities moving down. It's a crazy market.
I love it. Well, I mean, it's going to get intriguing here. The reason I'm joking and laughing, folks, is that, to me, the dollar's an ABC structure on the way down. And I know that's insane, but it's like, okay, man, bottom line is that, yesterday you made it a high with 29,000 contracts. You're going into 125,000, couldn't even test it. And then you're blowing out today with 37,000, man. It's like...
in my view, Tom, just to hear me out on this one, I think in 2016, I'm very much a fundamental guy.
Sure.
I think when markets get really, really volatile because of world events, sometimes you have to, put fundamentals to the side. I think sometimes you have to do the same thing with technicals to the side, because when things are going to chop around like crazy, you're going to have false signals all over the place. And in wildly volatile markets have characteristics of kind of just whipping everyone to shreds.
Yeah, see, I wouldn't agree with that. I thrive in them. I wouldn't agree with that at all. And the reason being is that what happens is that whether you're a bull or a bear, to me, there's so many different opportunities, whether you're going long or short. So I understand what you're saying.
And I think that there's pair trade. But I think that, look, fundamentals for cocoa are very good here. But technically, this market is broken down. Now, I think it's going to find some support here, from a fundamental basis. But you know what? There are reasons, big moves in other markets, that people are going to take risk off the table at certain points, and that's going to create huge opportunities. So I think that you have to kind of look at these markets very strategically here.
Oh yeah, there's no doubt, man. Listen, man. I think what the sad thing here, folks. I've been a bear for a while. The sad thing, I think the market's going down. That being said, I think we're in for a good year and a half of the wild volatility. But that's what happens when markets go down. That's
right. The most important thing in these markets, Tom, risk reward. Understand how much risk you're willing to take and how much reward you're seeking for that risk, and stick to that.
Right.
And make sure that you trade for better than even money odds.
That's for sure. There's no doubt.
No question. I think that's like really kind of the mantra you have to keep saying to yourself as you approach these markets and dip a toe in them, because there's a lot of sharks out there looking to bite those toes off. And a position that you might get right, can very quickly change on you.
Well, what also happens, though, is this. Is that the biggest sharks, and this is, folks, you'll see this over the course of time. The biggest sharks are actually, they get hurt in these markets very, very quickly. The difference is that they can come back very quickly too. They'll change their rhythm, but at the beginning they get hurt, and then it only takes them a couple of weeks to figure it out and say, okay, man, hold it, different market here. Let's rearrange what we have here. Do you know what I mean?
That's right. Listen, when I sat at Solomon and we had wild markets, I've seen guys sitting on trades, 5,000, 10,000 lots long in a certain futures market.
Oh my God!
And they would very quickly flip it around and sell 20,000 lots and be the other way.
Yeah, well, you have to.
It's a massive quantities, but that's why the market it contributes to the choppiness.
Oh, it does. It does.
Oh,
well,
big time.
and what happens also, it does contribute, and it will stay like that until you get to levels that are under, which you would say, under the fundamental value of the equities. That's just how it goes. Markets, we've heard it a million times, folks. They always shoot in large ways. And what does happen, the cool thing for all you bulls out here is this. When you have distribution at highs, which we've had for the last year and a half, distribution takes a long period of time. Lows don't take long periods of time. Lows are vicious, maybe we're in markdown period for a year, who knows, but they don't take that long to make lows,
Right.
and lows are vicious, man, so.
Lows are vicious, and it always goes lower than you think it's going to go.
Oh, totally, man.
Yeah, it does. I mean, the one thing about the stock market here for me, and is that I think that, it's all this so far, what we're really seeing is China related, no question. In my mind, we have yet to see oil related. In a way, the equity market saying to itself when it comes to oil, last March when we got down to $42, oil popped all the way to $4.62. When oil went down to $37.75 on August 24th, it popped all the way back to $50. It feels to me like the oil patch in the equities are waiting for that third pop up. And if it doesn't come, it could get real ugly. And because there are so many oil companies in these indices.
Oh, yeah, no, I think it's going to. I think there's something. It looks to me that we have more oil than any of us realize, because it's just like, it just can't. And here's another reason, folks. So check this out. You probably just seen this, Andy, but it just come out when we were just on, that Saudi Arabia is thinking of doing an IPO on
Aramco. I saw that, and that is huge. They're thinking of selling their crown jewel. That says it all.
Exactly. It's like, right. Oh, really? You're at the lows?
That says it all.
They're going to do an IPO? Oh, my God.
Oh,
okay,
God,
brother. Hey, listen, I'll let you go because I know you get a lot of work to do. Thanks so much. We look forward to the show.
Talk to you soon. Have a good one.
Okay, man.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, if you do want to get in the gold market, the silver market, you can check out my newsletter, The Gold Report, at TFNN. You can test drive that 30 days absolutely free. You go to TFNN, you go to newsletters, go to investments newsletters, you see the gold report right there. If we take a look at a few of these equities, it's going to be intriguing watching how they're trading right now. If you go to Anico Eagle, what you're going to see, Anico Eagle, we're at $29.90. You know, this came off the low of $25 3 days ago. You're going into the last swing point out here, which is $30.69, and you're coming into that with volume, which is pretty sweet. You know, we'll see it's laying right underneath, and it's going to do just about the same amount of volume as that swing, which is really important, because you take that swing out of 30.39, you are going to be at 34.89, which is the high that was generated in May of 2015, like ASAP. If you want to see a little rocket ship, this is going to be wild. Now, don't go buying this. We own this, but I'm probably pretty close to selling this right now. And it's just because, it's not because, well, no, it's because you'll see this extension. This extension's insane. This is Harmony Gold. You know, Harmony's up 11 cents now. It doesn't seem like much. It's $1.44. But Harmony in 4 days has gone from 92 cents to 145. And 1 month, it's gone from 54 cents to 144. That's a very large move. That has to do with, you go over to South Africa and you look at the rand. The rand dollar to the U.S. dollar, folks, is 16.06. That's $16 to 1 U.S. dollar. When gold was at its highs, the rand dollar was $6 to 1 U.S. dollar. That type of weakness inside the rand is just extraordinary for South African miners. The reason being is that their expenses are in rand dollars and they get paid in U.S. dollars. They have 27,000 employees, so you can imagine their expenses have gone down dramatically when their product, the product that they sell, has actually gone up. I'm going to put up the gold contract for you, and I'll show you how this works, because this is about one of the biggest things I've seen ever. You know, we take this, I put the gold contract up, and I'm going to put it up in rand dollars, and what you're going to see is that in rand dollar terms, we are at all-time highs in gold. I can bring this back. Doesn't matter how far I bring it back, actually. It's just extraordinary. So picture the when gold was at the high, that would have correlated and related to a 14,000 price. Right now, you're talking about, in rand dollars, you're talking about a 17,820 price. So you get the gist of it. It's huge amounts of capital they're taking in U.S. dollars, and they're paying out Rand dollars. Let's go to Tom in New Waterford, Ohio. Hey, Tom, what's going on?
How you been?
I'm doing great, man. Yourself?
All right, doing a little bit of remodeling the house.
Oh, that's awesome, man. Cool. That's always a challenge, too, right?
Yeah, oh, yeah. Yeah. I want to look at Sun Edison today.
Let's take a look at it. You got Sun Edison. They manufacture semiconductors in solar energy technology. It's panels, I believe, right? Is that what that is?
And renewable energy.
Okay.
Right.
So the low is $2.55. The high is $3.30, $33. This thing is getting crushed today, that's for sure.
All right, it's going down and filling that gap. It gapped up on.
Yeah, no, I can see that. But I wouldn't bite just yet. I'd give it another day. It looks to me, okay, so Sun Energy, folks, came off a low at $2.55 November 20th. Runs up to $6.85. Has one leg down with monster volume. It goes from 667 to 446 with 155 million. Today you get 152. That's big volume, man. This was going to test out the low again. I'd let it get into this $2.81, man.
All right. Well, I mean, I bought when it went up. It gapped up, and I bought some, and then I sold out at about almost 7.
Nice.
Well, I sold most of my positions, put a little bit, almost a house's money, and now it's coming back down. I was going to just put the same money back in.
I know, isn't that cool?
Yeah. I mean, it's like free money.
What's so cool is that when you do what Tom just did, folks, okay, a couple different things end up happening. You're waiting for the retracement, and when you actually get it, you can go in and you don't have a huge amount of worries or anything else. You just that is what I call the real strong hand. That's the reality, which is really cool, you know.
Yeah, it's awesome. Hey, all right, well, that's all I need. That's all I.
Hey, tell me, what are you doing with your house? What kind of remodeling?
I redone the hardwood floor.
Oh, nice.
Repainted the living room. I'm putting crown molding up today. Going to get the trim gun.
Now, are you using one piece of crown, or are you using 2 pieces?
One piece crown.
Okay.
It's 4-inch.
It's now. There's a trick, folks. Okay, if you use crown, this is pretty cool. So we put a lot of crown up. There's a trick that you can do that it not only looks extraordinary, but it depending on how many inches you want, you can actually take one piece and you bring it against the wall, and then you just take a second piece and you're going to put it on an angle. And what happens is that you can end up doing like a 12-inch crown that looks like one piece of crown, but it's actually 2. So that's going to look beautiful, man. That's awesome.
Yeah, we have shut down at work.
Okay.
And my whole shutdown, I have to do a remodel.
Your wife must love you, man. That's awesome.
Well, actually, my girlfriend's from down Florida.
Oh, that's good. That's a beautiful thing, man.
Where are you guys located? I got a financial conference.
We're in Clearwater.
Clearwater.
Come on by. Where is it?
It's Universal Studios.
That's in Orlando. Yeah, right.
Right. It's somewhere around there. I'll be down there March 13th, I do believe.
Well,
I'm the financial secretary of the union, so we got to do our LMs and all that stuff.
Oh, that's awesome, man. That's awesome. Well, we are about an hour and 30 minutes away from you. If you have some time, come on by, man. Give us a buzz. Come on by. We'll have lunch or something.
Yeah, sounds cool.
Okay, Tom.
All right, man. All right, we'll see you later, Tom.
Have a great one, man. Have a safe one. This it's gonna be so you got, let's see, how many you get 10 minutes. We got a little bounce going on here. This will be intriguing to see. So watch, if we pull this S&P up, it'd be really intriguing to see whether it can get to where the bounce was this morning. Because if it gets to the bounce where we were this morning, folks, which is pretty extraordinary where we are right now. That bounce this morning is 1669, so it would have to run 29 points up from where we are. But when you have a market like this, that's doable. I don't think it's doable in 10 minutes. What is doable in 10 minutes is probably another 10 points. That is going to set up an intriguing morning tomorrow. because what you do have is that, in the course of 6 days, we've sold down 400 NQ points, and you've sold down 145 S&P points. That is some movement. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's down 350. Nasdaq's off 128. S&P's are down 45. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 360. Nasdaq's off 133. S&Ps are down 45. And when Andy and I were finishing up there, folks, we were talking about Saudi Arabia. Now, so check this out. Talk about oil. Then this is pretty intense. So picture, we have oil right now at $33. Well, the Saudis are thinking of doing an IPO on the largest oil producer in the world. It's their state company, okay? It's Aramco. No, it's let's see. Yes. So watch how this works. This is absolutely phenomenal, actually. And this wasn't just this was actually one of their representatives coming out. A potential initial public offering is under review for Saudi Arabian oil company, said Mohammed bin Salman, the kingdom's deputy crown prince, with an interview with The Economist today. A decision will take place in the next few months, he said, without giving further details. That's amazing, folks. That's like so crazy, it's unbelievable. I mean, that would, I suspect, that says a couple different things. I'm thinking that it's probably, it very well, if it's a couple of months that they're going to do it, and they actually do IPO it, more than likely that would be the low in oil. And that'd probably be like, if you remember, going back to the lows in gold, what you had is that you had Brown from the British Commonwealth, well, United Kingdom. He sold not all the UK's gold, but he sold a huge amount of gold at the lows. So we got into gold at $282.50. The low is like $250. He sold that was them selling the low. It was like, oh my God, So this is going to be pretty wild if in fact they do that. Okay, I believe. Let me just see something. I think this would be the world's biggest crude exporter, considering selling a stake in its state-owned company. Okay, so picture this. That controls more than 10% of the global oil market. So you can see, you're talking just about monster numbers. But we'll keep our eye on oil in general, because what is just absolutely amazing is that they're even laying that out there. Now, that being said, they're going to have some challenges. The reason being is that they're, when you're a state-owned company, the real question is going to be, what is going to be the transparency inside there? And good luck with transparency anywhere over there, period. Never mind putting money into it. Volume-wise out here, let's see what we're cooking with on the indices right now. Right now, the NYSE, we're at 860. That means it's going to come in at about $1 billion. We did $1 billion yesterday. On the NASDAQ Composite, we're at Composite's coming in with some juice. The Composite's already done 2.2. That's saying the Composite's going to come in with more than likely, I'd say that's about 2.5. You're going into the October 2nd level. 4693, 46. Oh, this is cool, man. You're going into the October 2nd as well as August 24th. So October 2nd, what we did, let me see this. October 2nd was an up day. October 2nd, we did 2.1. So watch this. It's going to be more than October 2nd. I doubt it's going to be more than August 24th, though. August 24th. Yeah, August 24th, we did 3.4 billion. So those are the places that you're coming into. So what you have there is that it's going to take quite a bit to break down that place. We'll see how this bounce come in, what kind of anemic volume you have on the bounce, and what type of an ABC structure is setting up. What you are going to get a good heads up on is that those banks, like a Goldman Sachs, is already breaking those lows. So Goldman's at 164. That's on its way to 135. So this, bankers want to go at a lower price. You stay right there, folks. I'm going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We had the Dow Industrials closed down 392, NASDAQ off 146, S&P's down 54, gold contract up $16.60 at 1108. Gold, folks, on its way to the 1200 level. Suspect, we'll see what it does at about 1154. You had the wide price spread. You had the accelerated volume, all the above. It wants higher price. Silver finally caught a bid. Silver up 31 cents, $14.29. Platinum flat at $8.78 an ounce. Copper got smoked, down 6.5 pennies at $2.02 a pound. We'll see if, in fact, copper can hold the $2 level. Copper got to $1.99. It did reject price. Monster volume down there, though, so I suspect it's going to get tested again. Oil continued down 70 cents, $33.28. Oil wants to run under that $30 mark. It looks like it's an ABC structure on the way down. What it had done yesterday, it took out its low. Monster volume as it took out its low. Your price projection there is $28, $28 and some change. Bonds, 10-year up 10 ticks, 127.06. 30 up 17 ticks, 156.04. Now, these bonds, they finished the day pretty good, real good, actually. Prior to the open, they couldn't catch a bid, which was really unusual. Bottom line, we'll see if, in fact, bonds can get to higher price, stay at a higher price. When you get a market that is down, like we're down today, the percentages prior to the open, and money still doesn't go into bonds, it says quite a bit, meaning, to me, it's saying that we very well could have topped out in the bond market. If that's the case, by the way, that's a market that started a bull run in 1981, so it's pretty amazing. We had the Dow off 2.3, the NASDAQ was off 3, the S&Ps were down 2.4. King dollar down 986.6, 98.28. The euro up 15 at 109, and the yen was trading at 117.58. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? Okay. You're down. The SPY's down $4.77. You've done volume of 206 million, and we are at 194.05. The 194.05 brings you into the benchmark, which is October 2nd. The high of that benchmark is 195.03. Couldn't hold the benchmark, so guess what? You can get down to the low of this benchmark, which is the 189.12. I do expect, we're going to get a bounce out of here and do an ABC structure on the way down to blow out the August 24th lows. The reason I'm saying that, folks, is that if you go over and you go look at Goldman Sachs, what you're going to see is Goldman Sachs blew out the lows today, which is pretty amazing, by the way, okay? Goldman Sachs, you go back 6 months, was trading at $214. August 24th was the nastiest day we had thus far. Goldman's trading at 172. It does a counter trend bounce after reaching a low of 167. So 167 was reached September 29th. Does a counter trend bounce all the way up to $199. Straight down 199 to 163. Blows out that whole area. Goldman's on its way to 135. That's a heads up in itself. That's a monster heads up across all the markets. King dollar. What do we have with King dollar? We take a look at King dollar. King dollar couldn't handle the December 4th level. Now, December 4th, that's when Draghi had come out, European Central Bank president. He had come out and said he's going to extend stimulus over there, but didn't extend it, okay? Expand it, rather. That's when the dollar index went from 100.7 down to 97. 125,000 contracts. We had been doing a counter trend bounce going up into that level. We reached a price point yesterday inside the dollar index. That index got to 99.75. Anemic volume, did 29,000 contracts. And guess what we did today, folks? You came off those levels with monster volume once again. 39,000 contracts. This thing wants to go after the 97.22 level, which is the low that was established December 15th. What I expect you're going to go after is the swing point from October 15th, which is 94.05. That's the way this seems to be setting up. Pretty wild. There's no doubt about it. Now, let's go into the bond market. So the 10-year bond. Let's go to the 10-year first. 10-year bond out here today does 1.3 million contracts. Good contracts. No two ways about that. Gets to a price point of 127.10. The swing high, 127.10. So what you're going to have is this. That high will be tested again tomorrow morning. We'll see whether it can take that high out and actually get up to the highs in the bond period at 129.18. The closing high is 128.30. We're going to know tomorrow morning. The reason I'm saying we're going to know tomorrow morning is that it's going to be really hard for this market to bounce at all when you had 4 down days like this. Markets don't turn on Fridays. That being said, it doesn't mean it can't bounce a little, but if money does not go into that bond market tomorrow and blow that high away today, that's telling me that, guess what? That baby has made its highs. So technically, this is what's so wild about it. You know, technically, the setup is almost there. It actually is there. Fundamentally, the setup's there because the Fed already went up once on rates. You know, so the 30-year, and what has happened, folks, the 30-year leads the 10-year. And the 30-year just didn't have the juice. Now, the 30-year is right next to its closing high. The closing high in the 30-year is 157.16. Well, we hit 156.25. You know, you're talking that there's 32 ticks in a point. So what you're talking there is you get, 7? You were 23 ticks away from a closing high. And it sold off. So the bond market you want to keep your eye on, because I suspect right now that more than likely we have reached the high and you're going to see this back down. Because when markets get toasted like this and money doesn't fly into the bond market, that is saying quite a bit. Coming tonight, now what we're going to have is this. So Shanghai, that was the 29 minutes, was down 7%. Bottom line, Shanghai tonight is going to open, and they took the restrictions off, the circuit breakers off. They didn't take the circuit breakers off. Well, they didn't take the regulation off that if you own more than 5% of the stock, then you can't sell. That being said, you know, we'll see where Shanghai shakes out tonight. And, of course, that will affect markets right across the world. What's affecting market, you get a twofold deal there, folks. You have the Shanghai market coming down, so your equity's coming down. Well, the yuan is getting devaluated simultaneously. So if you spend your money in China, no big deal. Guess what? You spend it overseas, you are getting toasted and roasted. You stay right there, folks. We're coming back with our man, Mr. Sean Wright. We're going to be talking about what him and his partner think and Andy think about where the market's going. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 392, NASDAQ off 146, S&Ps down 54. Now we have our man, Mr. Sean Wright. Folks, Sean, his partner Gavin, and our man, Mr. Andy Heck, wrote an article together. This is on Seeking Alpha. It's the top 10 reasons why the stock market will tank in 2016. Now, this article, by the way, was written before we start plunging at the beginning of the year. We got our man, Mr. Sean Wright. We're going to talk about what those reasons are. Sean, welcome to TFNN.
On.
How you doing?
I'm doing great.
Good, man. Well, listen, thanks for coming on, number one. And Sean, folks, Gavin, and our man, Mr. Andy Heck, they are with Cardin Capital and Cardin Futures. And at the beginning of the article, which is pretty cool, you know, they have that 14 banks are saying that in 2016, we're going to be up 6.5%. And you guys are making a case that, you know, they're dreaming, right?
Yeah, we basically, you know, we saw that article and we thought these guys are just going to be dead wrong. Obviously, they're writing it because they got to keep their clients excited.
Yes.
You know, they got to keep the Muppets like interested, right?
Right.
But you know, when you look at it, I mean, our market timing signals have been telling us for a long time to be cautious, and when you then combine that with all the other qualitative factors that are out there, you know, it just didn't look to us like there was any way this could be a strong year. There's so many arguments against it, and that's why we knew we had to put out this paper. What we didn't know, however, though, was that, you know, China was going to have 2 trading halts in the meantime. I mean, the timing just happened to be, you know, fortuitous.
How cool is that, right?
Yeah, you know, sometimes a blind squirrel finds a nut.
So first off, talk to me why you think that the market is going to basically, you know, go south this year.
Well, let's just start out with a couple basics. You know, the way we look at it is markets are cyclical, and, you know, humans have sort of this behavioral cycle, if you would, that kind of means that the economy is going to have a cycle every 5 to 7 years.
Sure.
So we went back and looked at the historical data, and what we found, this is, I mean, I think this is very telling. You can look at all sorts of other stuff.
Yes.
But we went back and we looked and we said, how many years in a row could you have an up market? We looked back to 1871, that's all the data we had, and we found on average it's typically about 4 or 5 years for a bull run. But
Sure.
there are a few cases where it's longer. But actually, there was only one case where it's ever been higher than the last 7 years that we just had, and that was, you know, when Reagan, you know, stopped out inflation and interest rates went down so dramatically in the 80s. That was 8 years. The current 7 years from 2009 to 16, which were all up in a row, that also stands alone. There's never been any other time longer than these 7 years other than those 8 years.
That's a bet. Yeah, no, and that would make sense. That's pretty amazing, no doubt.
It's just a very relevant statistic. Let me just give you one other data point.
Yes.
Whenever, I mean, which you will know from your career, obviously, you know, because you have so much experience. Anytime you see a global M&A volume record,
right,
it's almost always a top signal. It's just like when the tallest skyscraper gets built.
Yeah.
You know, it's always the end of the cycle.
Man,
right?
how does that happen? Isn't that crazy? Think about that. I mean, that's.
You know, I'll tell you how I think it happens.
Okay.
Basically, you have to get a bullish period for a long enough time, you know, to
Yes.
where you basically have so many people that are willing to spend money that outrageous projects happen.
Right.
That's why it always happens at the very end of the cycle.
It's just amazing, too. And I guess that they've made so much money for so long, there's zero fear that's left, right? And,
right.
you know, and I guess, do you think, you know, this gets intriguing, folks. The reason being is that a lot of this M&A, they're using other people's money. You know, it's large CEOs, right? So and there's bonuses if they can get it done and get out, right?
Sure, absolutely.
Yeah.
It's all about using other people's money. Interest rates have been driving this. You know, same with stock buybacks, which is one of the things we mentioned.
Yes.
Stock buybacks are at a record. When are they usually at a record? Right at the end of the bull market. Why? Because, first of all, the companies have tons of cash. They're flush with cash. A lot of times they don't know what to do with it. And, you know, if you're a CEO and the market's just really not giving you what you want, and you got options that need to get in the money, what are you going to do?
Yeah.
Well, just turn on the buyback spigot, you know, make your own luck, right?
Yeah.
So that's really what's happening here. But, you know, one of the other reasons we found that, you know, that the market was probably likely at its top is just because the buyback index, which, basically is an index of the top 100 companies, according to their buyback ratios, it's not outperforming. Most of the time it does. I mean, just logically speaking, right? If you got more buyback going on, typically you're going to do better than the index as a whole. That when that starts breaking down, it's a very clear signal. That's been broken down since August.
So when you're setting up your strategy, for 2016, what exactly, it's kind of nice because you're in the futures market and you're in the capital markets and you guys can move, right?
Yeah, well, we're flexible. You know, a lot of people who are just long only aren't.
Yeah.
So, for us, we've been hedged since, kind of the middle of December.
Yes.
And, so that's in like the stock portfolios that we manage. We're not taking market risk there, at least not at the moment, because our market signals aren't telling us to take any risk. It's just not a good time to take risk. I think, that's really where people need to be right now. There's no shame in sitting on cash, right? When you see something starting and it's clear that, we're now through the bull market. You don't want to sit there and kind of wait for it to turn around. You got to give it time, right? It'll probably be a rather slow bottoming process, just like a topping process takes a while. Bottoming processes tend to go a lot quicker,
But it takes a long time to get down to the bottom, right? Exactly. No.
Well, but still, that happens a lot quicker than a bull market.
There's no doubt, man. There's no doubt. So, hey, listen, let me ask you. You're in San Diego, right? I know. Now, where is Gavin?
Gavin's based in Denver.
He's in Denver. Andy's in Las Vegas. And you guys all teach at the university in Denver? Is that what is that how you guys met?
The two of them do. I don't teach in Denver.
Okay.
But Gavin and I were introduced by a former colleague who I shared an office with at one point, and Gavin shared an office with at one point at different companies.
That's awesome, man. That's awesome.
Yeah.
And so when we're looking at here, let me see. Give me another reason. You just gave me 3 reasons.
Right. So let me give you a couple other reasons here. Earnings are not growing.
Oh, that's a big one, right? Yeah. Right.
The market doesn't go up if earnings aren't growing. Right. When you invest in a company, you're looking at the future cash flow stream of a business, right? When it stops growing, it's just worth less. We've always said to people, when the market stops going up, it goes down. Right? If you look at 2015 as a whole, the market really never went anywhere. Right? That was a pretty good indication that eventually it was going to go down. And so we believe that we've now started a secular bear market. When you're in a situation where earnings aren't growing anymore, and margins are at their peak, which they also are right now, because margins are extremely high.
Yes.
The last time you saw margins across the S&P this high was in 2007. There is sort of a natural limit to margins that can be reached, across the economy as a whole. It just really, it's kind of just a natural limit, right?
And, I agree. And it's almost like common sense. When I look at a company like Apple, it's an extraordinary company. But, how do you keep growing? And it's amazing, as a public company, they destroy you when you can't grow. But it's like, okay, give me a break. They grew in an extraordinary way. And it's like, okay, how do you grow hundreds of billions of dollars, right? It's amazing.
Yeah. Absolutely.
Well, listen, man, it was a pleasure to have you on. Love to have you on again. And, of course,
thanks, Tom.
We're looking forward to listening to your partner, Gavin, and Andy at 5 o'clock.
All right. Sounds great. Thank you.
Thanks, Sean. Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And of course, don't forget, 5 to 6 Eastern Standard Time tonight. We've got our man, Mr. Andy Heck, coming up. He's going to be coming up with Sean's partner, Gavin. They're going to be talking about fundamentally exactly why they think that we are going down. We take a look at the Dow Industrials. The only stock that was positive inside the Dow today was Walmart. Walmart was up 2%, which is pretty amazing, actually. Walmart was up $1.48. The low of today was at $62.95. The high was $65.23. It closed out at $65.02. Now, don't forget, folks, at TFNN, our man, Mr. John Logan, 8 o'clock every morning, has a great show. He has a great scanner. He was bringing this up this morning. He's been bringing it up the last few mornings that, hey, listen, in this bad market, Walmart was the only performer that was out here. And it's pretty, and we're talking about before the market opened, too. That's the bottom line. We take a look at the largest loser inside the Dow Industrials today was GE. GE was down 4%, or 128. Apple was down 4%. $4.25. Boeing was down 4%, $5.82. JP Morgan was down 4%, $2.54 at $60. Now, I'm going to stay with these banks for a bit because you want to wrap your head around these banks. So check this out. So first off, JP Morgan didn't make a high. The high that has been established in JP Morgan, when we take this back, the high was established July of 2015. That high is $70. August 24th, it got toasted, roasted, all the above. it's hard to tell, what price it actually traded at because there were so many bad ticks on the 24th. So I'm not going to take the pricing structure from the 24th because on the 24th, it traded from $62 to $50. What we do know, it did trade on October 2nd as well as the 29th of September. It traded down to a price point of $58.53. Well, guess what, folks? We're at 60.27, and you're coming into that area with monster volume. That's going to blow that area away. We did 6.8 million shares today. 5.4 million is the low of 58.53. It's going to go after that. Now, I had mentioned Goldman Sachs. You bring up Goldman Sachs, and you're going to see Goldman Sachs is leading the way down. Goldman Sachs took out all the swing lows of the past 6 months and took them out with some juice behind the move. We did 5.6 million shares today. We're at 164. You put this on a monthly basis, it looks like 135 is game here. 135, where is she? Yeah, 137 is the high of August of 2011. Now, the August of 2011 deal is a big deal. The reason it's a big deal is that there are many equities that first broke the October 2014 level and then ran and are running down to the August 2011 level. So that is a heads up in an extraordinary way. We go take a look at Big Blue, IBM. So what do we have with Big Blue? Big Blue going after its lows. Now this is, Big Blue's been building cars for a long time in order to still get to lower price, which is pretty amazing because Big Blue has come down from $215, you're at $132. The swing low on Big Blue we're at right now. Well, we're at it, folks, with 6.9 million shares versus 4.6. The low is 131.65. If we break that with volume, you get another ABC down. This ABC down is another $20 ABC down that will bring Big Blue into the $120 area. That being said, it looks to me like Big Blue actually wants to trade down to, 116. 116 has always been the benchmark. And, it's been a one-way trade from 215. Now you're at 132. 116 is the high of the low of October of 08. And if you come down there with volume, of course, you can go to the bottom of it. I think it's going to be really hard to break that down because on a monthly basis, you did 315 million shares. That's a lot of shares, man. And Big Blue itself, they've been buying back shares. They've been doing everything and anything. And all that has done is that they've lost more money on a continual basis because it's been a one-way trip. That one-way trip has been on the way down. Now, let's go over to the oil market. So, oil is on an ABC structure on the way down. We broke the B point 2 days ago. You broke it with volume. And you got to remember something. If you have my book, The Art of Time in the Trade, you know that an A to B equals C to D. The A to B portion is a straight line move. The B to C is a consolidation, although it goes all over the place. The C to D is a straight line move. They're great on the way up, they're dangerous on the way down. The reason being is that because of the straight line move aspect of it. So we broke the B point, and the B point in this oil contract was $35.35. The volume was 403,000 contracts. Well, we did 564,000 contracts taking that out. That sets up a $28.25. I believe it's $28.25 or it's $28 in pennies. $28.92. That's what it is. Okay. So that being said, now I want to show you something here because this is intense. When we go over and we take a look at oil, and you put oil up, and I'm going to put this up on a continuous contract now, what you're going to see is that on a monthly basis, I'm pulling this back on a monthly, the monthly swing low in a continuous contract is $32.40. Well, we went to $32.10 today. So it's like, yeah, the further if we actually go to $28 on this ABC structure on the way down, that is going to be a disaster. The reason being is that means that the continuous contract breaks 32.40, gets underneath it. Well, when you get underneath it, you know, the next step there is like $25. That might not seem a lot, but $25 on the continuous contract will correlate to probably around $23.50, $24 on the contract that is trading, meaning the front month. Oil trades every month, folks, okay? So there's a lot of oil. That is extraordinary, okay? That is problematic. And why? Because as our man Duffy says, that it would pull stocks down big time. Well, let's go over and look at the monster. And there's no doubt. ExxonMobil, down 124 today. You are at 76.23. It has a high volume swing low. Now, this came off the August 24th level in an extraordinary way. We went from $66.50 straight up to 87. Well, guess what? Let this come back into these levels and reject price, because we expanded volume today, a rejected price, and I suspect it wants to run to 71, where it's 76. We'll see whether it breaks down there. That's ExxonMobil. Chevron, take a look at Chevron, same setup. Chevron actually broke a swing point today and broke the swing point with volume. The swing point was $84.25. The volume was 13.3 million. We're at 83.02. We did 15.2. That sets up a test of that high volume $75 level. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
take your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We had the Dow finish down 392, NASDAQ off 146, S&P's down 53. And, folks, as you come over to our website at TFNN, you're going to see right on the top of the carousel, join our man, Mr. David White, for a special 60-minute subscriber event, okay? Now, what this event is all about, folks, is this. Is that, first off, you have to be a subscriber to either one of his newsletters, which is The Path of Least Resistance or The Tech Insider. Now, you can do that right here, right now, absolutely free. How do you do it? You come over to our website at TFNN. You can test drive the newsletters. You can test drive both of them. Bottom line, you're going to get them for a month. You're going to get them free. And then you get into the subscriber event. The subscriber event is going to be on January 20th. That's a Wednesday. It's going to be from 5:30 to 6:30 p.m. And the webinar is going to be on using short volume to profit on both sides of the market. What you're also going to receive is this. Dave is putting together a white paper. I haven't seen it yet. My son Tom has seen it. Him and Dave have been talking about it. They were talking about it this morning. It's going to be a dynamite paper. It always is. Bottom line, you can come over. You can register right now. You can get the newsletters. You get the white paper 1 week before the workshop, and then you can come into the workshop. And, of course, don't forget, every trading day, 1 to 2 Eastern Standard Time, 2 to 3 Eastern Standard Time, rather. Dave's got a great show. And no matter where you are in the world, folks, you can get it right on your cell phone, TFNN.com. If you go to TFNN.com, on the right-hand side, you just hit Tiger TV. That brings the audio up as well as the video up. If you just want the audio, just go to TFNN.mobi. We come over and we take a look at the good old, let's go to Apple. So we take a look at Apple. Apple, of course, has been taking it on the chin in a big way. And I expect you're going to see more of that, AAPL. So inside these indices out here, Apple right now has been on a one-way track, you know, for quite a while, actually, with $96.45. Now, the high-volume swing low on Apple is $92. $92, okay, is the August 24th swing low. It looks like that is going to go after that number one, and since you are right next to it, more than likely we could probably go after it tomorrow. That being said, where that brings Apple back to, folks, is July of 2014, okay? The July of 2014. That is absolutely amazing. If we go take a look at QRVO, if we go take a look at QRVO, this closed at $45.65. That is trading at $40 right now. This happens to be one of Apple's suppliers, and let's see, third quarter revenue earnings below views. Bottom line is that their revenue, oh yeah, they come up short big time. So their third quarter revenue is $620 million. They saw $720 to $730. This is one of the Apple suppliers, so this will hit Apple more. That is on the negative side. If you something on the positive side, this is pretty cool too, folks. And this is just the common sense aspect of markets and how markets continually work with fear and greed is pretty amazing. So picture this. You know, you've had markets down big time. 5 days. The S&Ps, well, the Dow's off 1,000 points. The S&Ps, I didn't calculate the Dow, but so we have 400 NQ points in 5 days. You got 145 S&P points in 5 days, and one of our man, Mr. Steve Rhodes, in the den. And this is beautiful. Breaking news on CNBC. CNBC is going to host a special tonight, Market in Turmoil. That's the type of programs, that's the type of headlines that you need just to get a bounce going in the marketplace. That's his point. That'll be my point also, folks. Now, what's really going to be cool is this. So check this out. The Chinese markets have had circuit breakers on. And the way the circuit breakers work is that if you're down 5%, the market has to stop, and then it reopens, and then you can get down 7%. Well, what had happened is this, is that as soon as markets were down 5% in China, and this happened 3 days ago, and then it happened last night, is that 3 days ago the orders had piled up because people realized that you couldn't get out of the market because the market only had to go down 2% more. So what had happened is that those circuit breakers actually went against an orderly market, because simultaneously, as soon as it was down 5%, everyone pushed orders into the marketplace, and as soon as the market opened last night, their market was only open for 29 minutes, because what ended up happening, it went from 5% down to 5% to 7%, and it literally did that in 1 minute. Okay. Now that being said, I have the Shanghai market up here. Now let's technically bisect and dissect this. So watch what you have. Now this is a mind blower, folks. Okay, this is just absolutely a mind blower. So this is going to be great watching how this shakes out. So if you watch it, and folks, if you're in your car, remember that you can get the program's archived. Okay, you can get it archived, so you can see what we're going to go through right now. Okay, so we're going to go back to the August 24th, 25th area first. The high volume swing low from August 26th, in this case, the high of that number, the high of that market is 3,092. The low is 2,850. The volume there is 46 billion shares. Okay? So we're at 31.25 right now. So we're what is that? Let's see, 8 points. That's 32 points away from the high of the low. At 2,850, you're 130. You're 182 points away from the low. Okay, so 182 points is less than 7%, right? Okay, so watch this. Now, last night the market only had 7 billion shares. So picture, this is what's so bizarre about this whole deal. Of course, the market was only open 29 minutes. You wouldn't expect a lot of volume, right? Because it just sold down 7%. That's it. That's all she wrote. So 2 days ago, where the market also, well, 3 days ago, when the market went down 7%, you had 18 billion shares. Then we bounced. We got so low, and the market was open a full day. Now, when the market was open a full day, you did 26 billion shares. So watch this now. This is the correlation. 26 billion shares when the market opened a full day. It's going into 46 billion. Okay? Now, here comes the deviance in my thought process. Tonight, they're going to have no circuit breakers. Tonight, if I could read you the headlines left and right from many people out here, and I can understand the common sense inside the headlines. Okay, you get Bill Gross coming out saying he thinks the market's going to open down 6%. You got Mohammed Al-Arian coming out saying he thinks I'll get his, but he thinks at least 6%, 7%, maybe more. Okay, that being said, the deviance inside the marketplace, folks, is that don't be surprised if, number one, you're going to get the sell down at the beginning. But don't be surprised if, in fact, what happens is that it comes into that low and you get a bounce. The reason being is that it is a huge amount of volume to break through. And we'll talk about the 5% rule for the shareholders, because that is still in place. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. So we're going to stay with the Shanghai market because there's no doubt that Shanghai tonight is going to be the action, folks. Okay, so what the Shanghai market has had since last August, folks, is that they had a restriction in that if you owned more than 5% of an equity, you could not sell that equity in the marketplace, period. Okay, so you have large funds that are trapped in the marketplace, and they're trapped in the marketplace in an extraordinary way. The rule on selling was supposed to be taken away on January 9th so that they could sell. Well, they decided that they're not going to do that because the bottom line is that, of course, the market went down so fast once again. So you can imagine that they haven't given new regulations as to when, if you own more than 5% of the market, you can sell. So that is still intact. That being said, so you know that there's huge amounts of built up selling pressure that's in there. We'll see tonight how this comes into this 2850 area. It's something you really want to watch because I suspect, there's going to be, we're going to have volatile markets. This is at the very beginning of all the volatility. If I just bring up the S&Ps, just to review with you just quickly before we go into this close and we get our man, Mr. Andy Hecht, with a special guest, Gavin, coming up. When you take a look at the S&Ps, the SPY, we had been looking for the October 2014 level to get hit for quite a while. That level is 181. Went sideways for 7 months and then came down to 182.40. Well, it never hit the 181. We missed it. First, you're going to see it come into the 182. We're at 194. We'll see it hits 181. And if you hit it with volume, bottom line, this thing is set up. It's nasty, folks. That's the bottom line. It's set up for like a 1300 S&P. If we take a look at the cash S&P, we look at the cash S&P right now, you're at 1943. My take is, 1300, man. I mean, it's there. So if, in fact, this is the markdown period, remember, the markets, do 4 things. You have accumulation at lows with light volume. You have markup with good volume. You have distribution with low volume. You have markdown with volume. One of the Terry in the den was saying, maybe this is the real deal, meaning with the correction. There's no doubt. And what is in place, has been in place, and is those the three black crows. What the three black crows represent, those were put in place across all markets, by the way, the 18th through the 25th of August. That signal, and they always love to get tested, and the mind blower is that how can they get tested, because the markets go down so dramatically and they seem to can go all the way back up. You come off them, we've come off them again with volume, so your probability is very high that is the pattern. It's a candlestick council charting pattern. That's what it is. Three black crows represent a significant correction, not a normal correction. Yeah. So we'll see where this whole thing shakes out. Bottom line, that's what stops the fall. If you're not in the market, don't get in the market. If you're in the market, put a stop in. If you're thinking of buying the dip, guess what? Put your hands in your pocket and buy the dip a year from now. You stay right there, folks, because our man, Mr. Andy Heck's going to be coming up next. He's got a special guest for you. They are going to be talking about the fundamental reasons why they're looking for markets to go lower. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night. Safe night. Stay right there. Andy and Gavin coming right up. They'll get him, folks.